Hello everyone, welcome back from lunch. Just a show of hands, how many of you managed to make a new friend just now and went for lunch together? Okay, fantastic. Okay, so we're going to resume the program today. Of course, you'll be getting to our next speaker. He's going to be walking through what the fifth person team has been investing in so far this year and what you can maybe take some ideas from. But before we get to that, just want to get this quiz on screen. So it's a bit fun and it's a good way to get everyone excited again, or after the lunch, some of you might have a food coma, so this is a good way to wake up. I'd like to invite everyone to go to this website, kahoot.it, Kahoot.it, and when you get to that website, there's going to be a login box for you, 614979. That's going to be the PIN number for you to key in. So I'm going to run through a few questions. It's a quiz that we will be running later on today, and that's a quiz where you can win some prizes. So this is going to be a test quiz, so everyone can be familiar with how this website runs and how you can take part later. Oh yes. Please don't put Captain Planet or what, please use your real name or something close to it. And so there's no duplicate as well, something a bit more unique. So we're going to run through 5 questions. It's going to be quite fun, so I'm going to give you a minute for everyone to get into the room. Oh, I see Orion there, nice. How many of you have used Kahoot before? Okay, fantastic. So everyone, or most of you know how it's going to work. Okay, I think I'll give a couple more seconds for everyone to get in before we kick off. Trying to get in before we click on start? If you are, please raise your hand and I'll give you a few more seconds. Okay, let's start. Okay, there's going to be a time limit for each question. So, first question, what is 7 plus 25? If you know the answer, click on the relevant color and shape. Okay, most of you got it right. The answer is 105. 105, you got it right. Okay, so I still a bit of lunch coma myself. Okay, next question, question 2. Okay. We have question 2 here. What is the capital of Canada? The capital of Canada. Toronto, Ottawa, Montreal, or Vancouver? Oh. It's Ottawa, the one in blue. So 38 of you got it correct. Well done. Of course, a lot of people think it might be Toronto. Now you know. Question 3. What does the PE ratio represent? A company's share price relative to its profit, the earnings multiple, a relative measure of value, or all the above. Okay, is the answer in green, all of the above. Congrats to 29 of you. Our next question is, how many pull-ups did Rusmin have to do when he lost a particular 4 feet? 20, 100, 1,000, or Rusmin can't do pull-ups? Aha. It's accumulative, is it? Every month you do some. Okay. 1,000 is the right answer. Congrats to 2 of you. All right, last question just to end off this quiz. What was Victor's nickname when he was a Thai kickboxer? Victor Van Dam, Tiger Uppercut, the Busan Legend, or no nickname? Okay, a lot of you thought it's Tiger Uppercut. It's actually the Busan Legend. Why? Okay, Busan Legend. We'll hear from you later on. Okay, Rusmin, we're going to hand the floor to you. We're going to walk through what Fifth Person has been investing in. Of course, this is called the Alpha Lab portfolio.
Yep.
So he's done all the homework for you, so you can just copy his ideas if you want to and see what the Fifth Person team has been investing in. Oh, next page.
Next page.
Okay, so this will show you who scored the highest points in this round of 5. Congrats to Shing.
Real one, huh? This is a test run. Yeah.
We're going to have this quiz coming up later on in the event, so stay tuned for that one.
Okay. Oh, that was fun.
All right, go.
We should have more this kind of quiz game, all right? Later on, and also tomorrow. All right. Okay, so for this afternoon after lunch, this is the most difficult session. Okay, so I thought I will make a very important announcement that will be a very interesting to hear and look at, and you wouldn't want to close your eyes, because the moment you close your eyes, you miss that opportunity. Okay, so make sure you pay attention throughout. And before I make the announcement, I just want to see a show of hand. How many of you here are our Alpha Lab members? Can I see a show of hand? Wow, almost all of you. I think quite a number of you here. Okay, so those who are non-members, basically just let me explain. Alpha Lab Research is basically a subscription service that we have, and we do a full research on companies. Usually every month we release 2 companies and we do a full analysis on them. It's about 30 minutes to 40 minutes long in terms of the analysis. So we do all the hard back-end works for you, and you just need to tune in and listen to our analysis. By the end of the video analysis, right, you will have some idea whether this company is a good company or not. Okay, so usually we cover good companies and different types of company. Recently, Adam just covered Adobe. Who have watched the Adobe? Let me see, show of hand. Have not? Okay, this is one of the companies that is considered asset-light also. It's a software company, Adobe Photoshop. Okay, go and watch it all the way from business model, financial highlights. Okay, so basically each of this link have its own video analysis. Okay. And if you notice in the Alpha Lab, we have different strategies of making money in the stock market over the long run. Okay, we have growth strategies, we have deep value strategies, we have value growth strategies. Okay, so let me take some time to explain those strategies because you need different strategies to make money in different business cycle of the company. Okay, so every businesses go through business cycle. Okay, the horizon will depends on each industry, so it really varies from one company to another, and then the company will eventually die. So starting from the early phase, they start going to the growth phase, and then they start to stabilize, mature, and the company eventually, the industry gets saturated, competition comes in, and the industry becomes tougher and tougher to actually to be in. Okay, so you need different strategy to capture, okay, these companies before they go up in share prices. Okay, so usually for growth stage, these are the companies that trade at high PE multiples. Okay, so this is I will actually go through with you, every one of them, with you later. Okay, and then you've got value growth stage, you've got deep value. Usually these are the companies that have struggling, they have headwinds. Okay, so how we categorize those companies is quite simple based on these few characteristics. Okay, there's no hard rule or fast rule, but based on what we think that is a proper classification of them. Okay, and one company may change category the moment they start to mature. Okay, so like for example, how we categorize growth stock is basically based on their high growth rate in terms of revenue or earnings or cash flow. Typically, these companies grow at 30%, 40%, 50% a year. It's crazy, the kind of growth that they're growing. Okay, and they usually trade at high valuation, PE of at least 30 times, 40 times, 50 times. Sometimes it could be hundreds. Okay, and when Facebook first got listed, Facebook PE was about, I think, 100, right? Okay, so that's the kind of valuation they were trading at. And the business tend to be enjoying a very strong tailwinds. Okay, and they are actually on a very good path to grow their business. E-commerce is one example. Digital advertising is one example. The industry is actually growing. It's still growing until today. And they enjoy a huge economic moat with a good business model. Tends to be asset-light in nature. And they've got good people, visionary managers. Okay, and returns of this kind of top stocks is really dependent on maintaining the growth rate of the company. Because they trade at a high PE, market has a high expectation, and they need to maintain that. If they maintain the kind of growth they were growing in the past, the stock will continue to appreciate. Okay, these are high risk, high growth stock. Okay, one example is Tencent. Tencent has been growing over the past 10, 15 years at 50% a year, 40 to 50%. Each year, it's crazy, okay? And the stock, if you look at their past historical PE, they have been all the while been trading at 35 times PE, 40 times, 50 times PE. Okay, never once they trade at 15 times PE so far until today. Okay, so these are the kind of stock we classify them. It's a high growth stock, also at the same time the risks are much higher. Okay, and then we have value growth stock. The growth is quite steady, 10%, 15%, okay, 5%. And they tend to have also resilient business with some form of economic advantage. May not be that strong as compared to growth companies, but good enough to fight off the competition. And the industry that they are in also enjoy a long runway. Okay, and managers know how to allocate the capital well. Sometimes they may not know how to use the money, so they just return you back as a dividend. Okay, and they trade at a much more reasonable valuations. In terms of PE, you're talking about 15. 8 times, 20, usually less than 30. Okay, and the return of these companies usually depends on the continuous growth of the company, and they may also subject to re-rating if you find those companies that is trading at single-digit PE. Okay, for Alpha members, this video is already done. It's on the platform. For those who are not, I think you can just take photo from here. And one example for this is BreadTalk. Okay, so when I first buy BreadTalk, it was trading only at price to cash flow of 4 times. Okay, it was quite cheap. Price to free cash flow, I didn't calculate back then. Okay, so but in terms of PEs, BreadTalk looks higher, like 30, 40 times, but actually I don't value them based on PE, based on price to cash flow. But in terms of earnings growth, BreadTalk is growing at double digit, okay, less than 20%, but I think 15% that range. So this is one example. Deep value stocks, these are the stocks that are in the very tough industry. They have got a lot of competition, headwinds, or the industry they are in has been disrupted. Okay, but the stock is trading at a very cheap valuation. Okay, the growth has declined, business face strong headwinds, and they have very little or no competitive advantage. Usually it's a very saturated market, but they are asset rich. They got a lot of cash, property, investment, securities, and sometimes the management is not a good capital allocator. That's why the stock are being punished. Okay, and they carry little debt or no debt in the balance sheet because they are cash rich, and they still generate positive free cash flow. They don't burn cash. Okay, so we classify them under deep value stock. And one common characteristics with deep value stock is that they tend to trade at discount to the book. Okay, so and of course they tend to be out of favor, and really returns depend on the drivers. Okay, market re-rating. Okay, so one example is this Costco Shipping International. It's covered in the Alpha Lab also. If you're interested, you can go and watch. This is a company that I think Keith actually mentioned this to me. Thanks. Keith is investment mode. He's here today. Can we give him a hand? All right. So he actually texted me about this company. Rusmi, you should look at this Costco Shipping. You know, it's trading below net cash level. I think their cash level was worth something about 5 or 6 Hong Kong dollars, and their trading is at about 3 Hong Kong dollars or $4 Hong Kong dollars. Okay, so essentially this business is like you buy them, they pay you cash, extra cash. Okay, so you make them. But the reason why they're beaten down is because they are in a very tough industry. Okay, it's a service-based company. They don't burn a lot of cash, even though the dry bulk index actually has dropped. Shipping companies are not doing well. This company is still making profit. It's just a lesser profit. Okay, because of that, the market punished them, and the share price plunged. Okay, so this is one example. So when will this company go up in share prices? Depends. Okay, first is of course shipping industry recover. Okay, then this company definitely will start to enjoy the ride. Second is that market realize that hey, they have got so much cash, they are trading below the cash value. The market may just re-rate them upwards. Okay, so this kind you have to wait for quite a long time for them to start to realize it. Okay, so these are the stocks that we have. Now, just to put it simply, growth stocks are basically teenagers. You know, you're growing very fast, developing very fast, getting taller and taller each day. And value growth is the part where I am now, okay, cannot grow tall already. I'm more or less stagnant already. The most like 1 cm, 2 cm, right? And deep value stocks are old man. Cannot grow already. All right? You make a lot of money in the past, but because you are close to retirement, no company want to hire you anymore, you have no more energy, but you got a lot of cash. Okay? But because you cannot earn more money, the market punish you. If you got $1 million in cash in the bank, market say, no, old man, 500,000 I take. Okay? So basically, this is the analogies for you to understand simply. Okay, so this is the Alpha Lab research, and so far we have been running this service for almost 3 years. Okay, and this is the number of companies that we cover across different categories. Value growth, we have covered 45 companies. Deep value is about 17, and growth is about 5. Okay, our strength is in the center, value growth. Okay, that's what Victor and I, together with our team, Kenny, Adam, we have been very focusing at. Okay, of course, occasionally we come across growth companies. Sometimes we come across deep value. Jin Hao is actually good at it. Okay, he will be here later after my session. You can actually listen to him. He is the expert in this field. Okay, so far these are the companies that we have covered. Okay, I'm going to show you. Since day one, all the way, there are lots we have gone through. Lousy company, good companies, and most of these companies are really quite good companies. Some of them are deep value stocks, okay? And for the first time, we are going to release a new feature for our Alpha members, and that is Alpha Lab Portfolio, okay? Are you interested, excited? No? Okay. You guys want to know what we are buying and selling? Yes? Yes, okay, cool. All right, so Alpha Portfolio is basically the stocks that we have bought under the 5th person, okay? And we started buying companies in, I think, 2018, last year, okay? And we have been buying share, okay? And of course, along the way, next year, next 5 years, we will continue to buy share, okay? And this portfolio will be structured based on these few criteria. Okay, we will only invest into high quality value growth stock. Okay, those stocks that we think that is going to give us maybe 5 baggers, 10 baggers over the next 10 years. We're going to hold them long term. Okay, so Asia we're going to have 20 stocks, all right, and US we're going to have 20 stocks as well. We try to keep it max for these two. Of course, it's not going to be equal allocation. It depends on the opportunity. If we can find undervalued stock in Asia, we will deploy one. Okay. If you cannot find, then we will just keep it cash. All right. And so far, this portfolio is going to be a low activity. You will not see us buying and selling in 1 year. You will see us buy one time, maybe sell 5 years later. Okay. So it's going to be a very low activity because we believe that successful long-term investing, you should reduce your churn rate. Meaning to say that you should not keep buying and selling, buying and selling, all right? Good stocks, when you buy them, okay, they should compound for you, okay? Because the moment you sell, you still have to think, what should you do with the money? You need to find new ideas to let it run again. So usually when we find good stock, we stay with them, we let it run so that our compounding will take effect. Okay? And any companies that we come across, of course, we must make sure that the new idea that we are going to buy is better than our existing portfolio. Okay? And this is a mistake that I made over the last 5 years to 10 years. You know, because we are so exposed into so much opportunities today, because we are doing this full time, we keep churning companies, and we come across so many opportunities. And then buy, realize, hey, so many companies. Okay? So this is my own mistake also. Victor also wrote about this in the article. Okay? I will share with you guys more about this mistake tomorrow. Okay? In the morning session. Okay? So this is something that we want to do for this portfolio. Make sure we don't repeat the same mistake. And no deep value stocks. Okay? What I mean by not deep value stock, basically, I'm not saying that deep value stock doesn't work. It's just that deep value stock, when you buy the discount, when it reaches fair value, you have to sell. You cannot hold. Okay, deep value, the tendency is that you buy them cheap, you sell when it's fair value. That is the strategy. Okay, so we are not good at it, so we are not going to focus on that. Chin Hao is really good at it, and he got a very good return from that. Okay, and no speculative instruments also, like Bitcoin. All right, so all this, can forget about it. We will not touch that. Mainly in the stock. Okay, no other commodity like gold and stuff like that, because that has been our strength. And of course, no shorting or leverage. Okay, some of you will leverage using some money to actually invest. All right, but for us, we will not leverage. So purely will be from our own cash. So at least during good time, bad time, we can hold through. No one is going to disturb us. Okay, and of course, this is just a portfolio strategies, the principles that we follow. This is not final. Okay, as we go along the way, as I make mistakes, or Victor, or we all make mistakes, we will improve the system, the principle along the way as well. Okay, we'll come a long way. I make so much stupid mistake. Okay, and the stock criteria that we're going to invest have to fulfill all these criteria. Okay, the stock must be a predictable business with very little moving parts. Okay, you don't want the company, their cost of goods sold, the gross margins fluctuates very widely depending on the commodity prices that they're actually relying on. Okay, we don't want that kind of business. So those we will weed them out because it's so unpredictable. Okay, you will never know where the prices are going to. And these companies must have long runway. They must grow at double digit in terms of CAGR, be it revenue, operating profit, or cash flow. Okay. In the foreseeable futures, we can only estimate based on our understanding. Then we only invest in that. Okay, and they must have a scalable business model without taking on too much debt. Okay, this is essentially the morning presentation that I shared with you. And they must have enjoy reasonable pricing advantage over the competitors. They may be the lowest cost producer, or they may have branding. They may have high switching costs, some form of economic advantage that is protecting them. Okay, from other people's copying them. And we'll buy them at fair value, okay, or sometimes slightly above fair value, that's fine. Or if it's good, of course, if you can find them when it's still a small cap, we will buy them while they're still cheap, which is undervaluations. Okay, these are the kind of stocks that are very, very hard to find. Okay, and we only sell when the fundamentals deteriorate. Okay, so all these are very abstract. Okay, because we will only be able to explain them on a specific company. Okay, because these are just our guidelines to follow. Okay, so last year, is last year a good year? Stock market? It came down, right? No, right? Even for us, our portfolio actually dropped. Okay, so last year wasn't really a good year. In fact, in the Asian market, I think Victor and Kenny have shared with you, when we first started this portfolio, right? We were quite fortunate and unfortunate. Fortunate in the way that the market coming down, so it's easier for us to deploy the capital. Unfortunate is also in a way that we deploy some of it before the market came down. So meaning to say some of them are in red. Okay? And Jan to 2018 to September 2018 last year, market, I actually did a webinar, we did a webinar, okay? So those of you who attended the webinar will know. China market index actually dropped by 30%, 25%, and Hong Kong also dropped by 20%. So this kind of drop are usually actually bear market, okay? Mini bear, not the big bear, right? So, and it actually presented quite a lot of opportunities. Thankfully, we started to deploy some of the capital money that we have in the company, and we start to buy those companies. Okay? You want to know those companies? Yes? No excitement. Yes? Okay. All right. The first is going to be, drum roll please. Okay. Make a guess. Which company do you invest? So many out there, which means how to guess. All right. The first company is Silver Lake. Okay. So most of you should be familiar with Silver Lake Axis. Of course, we have done the research on the Alpha Lab. You can go back and watch. Okay, but for those benefit of those who are not members, I just want to present what Silver Lake business is all about. Okay, at least you get some idea why we buy into that company. Okay, just a brief one. Okay, Silver Lake is basically a core banking providers. Okay, if you go to the bank, OCBC, UOB, when you do your banking transaction and all that, you need your accounts to be updated the moment you transfer the money to someone else. Okay, so all these are possible is because they have companies like OCBC have Silver Lake behind them to back up their IT system. So they built the whole core IT infrastructure for the bank. The bank uses them to facilitate the banking transaction with all of us here in this room. Okay, so this is a core banking providers, and these are the customers in Singapore. They've got UOB, OCBC. In Malaysia, they have got Maybank, they've got CIMB, and so on and so forth. Okay, so these are good quality clients that they have. And of course, in the Asian market, they dominate about 40% market share. Okay, so this is just based on Asia itself. And so far, their track record in terms of implementation of the software is almost close to perfection. Okay, so it's about perfect, 100%. And if you look at the result, financial result, so far, a big chunk of their earnings, okay, actually came from the maintenance and enhancement and services, the one that in blue. Okay, so the one that in blue, if you look at it over the years, has been growing. Okay, and the one that is lumpy are those that, you know, when they get a new contract from the bank to implement certain new programs in the system, okay, of course they will charge a contract project value, okay, and that is actually one time. Okay, so once they complete those projects, they bring into the order book, the executive finish, then the maintenance income will come in, will kick in. Okay, that's why the maintenance income keep on coming in and growing. Okay, and 2017 and 2018 was the year where I think banks in Asia will actually suffer quite badly because of the first oil prices collapse. Okay, so a lot of oil and gas companies actually filed for bankruptcy, so they defaulted on the loan. Non-performing loans for bank actually has gone up. Okay, so the bank pulled back their spending on IT. Okay, that actually affected them. So you can see that this is also the down banking cycle in 2008 and 2009. The effect of overflow, I think 2 or 3 years later. Okay, then markets start to recover. Now we are on the second year of the down market. Okay, but of course I'm not banking on the recovery of the core banking system, but more on the recurring income that they are getting. Okay, this is the maintenance where the bank will still need to maintain regardless whether they go to other markets or they stop growing. You know, they still have to spend that amount of money. Okay, so if you look at the cash flow from operation activities, the one that in blue is operating cash flow. The one that in gray is actually capex that they need to spend to grow. Okay, so far free cash flow for Silver Lake Axis has been quite healthy. Okay, because whatever research that they've done, they actually pass it to the customers. Okay, customer want these new features, they will charge the customer. That's why they don't need capital to grow that much. Okay, so far their average free cash flow is about 172 million. It's a Malaysian company, by the way. Okay, but they are listed here in Singapore, and their main offices are also in Singapore and Malaysia. These two. Okay, but they report their currency in ringgit. And free cash flow to equity for these companies. Okay, let me do it for you here. Look at it, 50%, 30%, 40%. On average, you're talking about 30%. Okay, so now they are in the down cycle, of course, that's why the free cash flow actually has came down. But despite the fact that the down cycle for them, their maintenance are still kicking in a lot of revenue, profit, all right, for the company. Okay, so that's one thing that I like about this company. Okay, so share price have actually make a sharp crash. Of course, this is based on 52 cents, the price that we bought. Okay, and today what is the price of Silver Lake? 40.5 cents. Okay, based on yesterday closing. Okay, so this is one of the stocks that we bought before the market meltdown. Okay, so yeah, so Silver Lake, if you ask me what is my intrinsic value, okay, this is the price that we bought, 52 cents. Intrinsic value came out to be about 73 cents. Okay, so I base it on their recurring income and peg a PE of 25 times. Okay, because I believe that earning with subscription business or recurring business actually deserve above 20 times PE. Okay, so far in the past they were trading at 20 to 30 times PE. Okay, so I choose the middle ground. Okay, so this came out to be about 73 cents. And of course, margin of safety back then when I bought it was about 29%. Okay, so now on the ground, the management have actually told investors that they are experiencing recovery. Their clients are going to Silver Lake Axis to ask for new project, new contract. They want to implement new system because 2-3 years ago they were confused by this thing called fintech. So they don't know what to do. Okay, then they realize that hey, they still need to invest into their core banking system, and it is something that they cannot stop investing. Okay, so there's a risk here. Okay, and the risk with Silver Lake Axis is the RPT, related party transaction, and this is one of the reasons why the share price has been hanging at 40 over cent, 50 over cent, and not crossing above 60 cent. Okay, so far this has been the share price for Silver Lake over the last, I think, 3 to 4 years, ever since the short seller attacked the company. What happened here is that one short seller accused the company for manipulating shareholders, okay, by doing some financial engineering. Okay, so what happened with Silver Lake Axis is that they have these related parties transactions that they had deal with founders. Okay, the founders, Mr. Goh. Okay, Mr. Goh is basically an entrepreneur who founded Silver Lake Axis. Okay, and he has this listed company that is listed Silver Lake Axis, and he also has his own private entities that he owns. And his private entities, basically, he invests into startup. Is startup ventures usually loss-making or profit-making? Loss, right? Startup. So he didn't want to take the risk on the listed company, so he took the risk on his personal entity. And the board of Silver Lake actually also said, no, we are not going to change our business model. Our business only invests those IT or software company that are actually proven to be profitable. Then they will invest. Okay, that's why Mr. Goh took his private entity startup personally himself and he ventured into other industry. He wanted to use the core banking system of Silver Lake Axis to duplicate across other sector. Okay, so he basically figuring out how to do the startup. Okay, and because of that, last time his private entity used to do digital banking. So this third company never do digital banking. So when the past 5 years, 6 years with mobile banking, nowadays we do transaction online, right, through your phone, very often, right? When they start to go and bid for contracts, okay, they will go together as private entity and listed entity. They combine the capability together, the private entity will go and bid for the project. So when they win the project, the private entity will suck this project based on the competency to the listed company. And because of this dealing, there's related party transaction. You see where I'm coming from? Yeah, so because of that, the short seller said, hey, Go, you're trying to hide all your losses on your personal entities, and then you try to beef up the profit for the listed entity. So, I mean, he is right in a way to say that, but if you look at the context, it's just different business model. One is startup, one is private equity, which is proven, okay? And because of that, he shorted the company. He never short, but he wrote a short seller report accusing that Silver Lake actually boosts the profit. And the funny thing is, when you invest in S-chips, okay, when S-chip try to fraud you, are they trying to get out the money from the disco or pumping in more money to the disco? Getting out, right? Okay, but what Silver Lake is doing is that they are so-called making more money. Okay, they are not drawing the money out of the disco, but short seller also not happy. I short you. Because I have seen through so many fraudulent company. A lot of fraudulent company management, when they want to cheat you, they will try to raise as much money as they can. Then after that, they run away with it. Look at Sino-Granus. Recently, those of you who attended our workshop, you know that we have been talking about Sino-Granus. And just last week, I saw the news they defaulted on the loan that they're supposed to pay the Thai investor who put a lot of money to buy the bond. They defaulted already. So now I think SGX is issuing the query on them. Soon, you will see this company explode. Okay, it's a matter of time because they say that they got a lot of cash in the bank. Okay, but now they cannot pay the loan, the interest. That's quite interesting, right? Okay, so let's see. Yeah, but because of that, I think Silver Lake got affected and the share price crashed all the way to 46 cents, and today it's about 40.5 cents. And now when I went to the AGM, I asked the management, what are they going to do with this thing? You know, this is something that is overhanging the whole stock. Okay, are they going to reduce this percentage of RPT? And the board say that, okay, they are trying to fix it, but they don't want to acquire those companies that are loss-making for the sake of acquiring them to reduce the RPT. They will review Mr. Goh portfolio, look at those companies that are profitable, and business model has been proven, they will acquire them, they will buy them at good price, okay, and then they will put it on the list code. And over the years, the RPT percentage has came down, okay, and today now is about close to 8% only, okay. So this figure should continue to decline, maybe at a lower end instead of this kind, okay. He actually acquired some of the companies from the founder, okay. The digital banking companies, the 3 companies that recently acquired, so that also reduced the RPT transaction, okay. And from my own experience, I have been following Silver Lake Axis for I think since 2011. When I first looked at the company, analyzed them, it's been close to 8 years, and I interacted with them. I don't think this is the board of this management. I don't think they're out there to cheat your money. Okay, they are very honest people. Okay, they've got Bao State chairman John Lim. Okay, as the board of independent directors. They have got Ong Kiang Min, independent directors of BreadTalk, also sitting on the board. So I think so far those are the companies that I'm very familiar with, and these are the directors that I can trust. Okay, so I don't think they will play anything funny with it. That's why I'm willing to invest in this company. Okay, so all of them are okay, so we invested in Silver Lake Axis. Okay, and wow, when the share price collapsed, of course the company will show you what they have. We got cash. Okay, they pay you out special dividends. They buy back a lot of shares from the open market. 2015, they bought back at $1. This is before the short seller. When they start attack, they started to buy back already. 2016, when it crashed all the way down, they started to buy back even more. Okay, and 2017, they bought even more at average price of 53 cents. 2018 is about 58 cents. Okay, so far, this is the companies that we bought and we have in our portfolio. Okay, of course, there are risks in this company. First is RPT continuing to grow. Okay, and the banking cycle remains low until today. There's no new contracts won. Of course, you see the share price not moving anywhere. Okay, so far now they are in the very depressed stage. Okay, in terms of valuation, it's very attractive. That's why we bought. Okay, so just for your information, it's not a recommendation to buy or sell. Okay, can we agree? Okay, don't buy blindly. Please go back and do your own research. I'm just sharing with you what we bought. Okay, for our new features that we show. And anything with IT, okay, there is always a risk. Okay, you want to pay attention because I came across this at a social media platform. I thought it was quite funny to share. Anything related to IT, you can only pray. Hope it doesn't crash. I saw it in the social media, I thought it was quite funny. Because IT is like, you break down, you just break down. Today, the display screen don't show, then we are dead. You can't run through the whole program. Okay, so you can only like, oh, poppy. Okay, those of you who are not religious, it's okay, ignore this. Basically, hope it doesn't crash or get hijacked. Okay, that's for Silver Lake Axis. If you have a question, just write it down. Later, I will try to answer them. Okay, so far you're clear? Yeah, cool. Okay, so now we move on to the next company. I have no time to do the full analysis because it's going to take a long time. So I just do a short version. Second company is GAPAC. Okay, some of you have seen this. I've presented this a couple of times, I think a few times. Okay, so this is a company that we bought also. Okay, we thought that the company has a good potential to grow. They are challenging, they are facing certain challenges also, but I think they are trading at a reasonable valuation. Okay, GAPAC produce aseptic packaging. Okay, you know milk. When you go to the supermarket, you go to the milk segment. Sometimes you go to the fridge one. the milks there is actually, usually they don't use aseptic packaging. They use normal packaging, the paper packaging, and they just fridge it, put it in the refrigerator and keep it cool so it doesn't spoil. Okay? Those who are non-refrigerated side milk, the cartons at the normal shelf, okay, you will see some of the cow heads, okay, Dutch lady, they are in the package one, okay, like this kind. All right? These are not refrigerated, but they can put in this milk, put in this aseptic packaging and keep it for a long time, 6 months, 10, I think up to a year, without the milk, keep the milk fresh, it won't spoil. Okay, and because of that, it actually reduces a lot of cost in terms of keeping the milk refrigerated. There's actually a lot of cost to maintain that. And this packaging is really a breakthrough for Tetra Pak when it first came out. Okay, and today it's been in the market, and they are the only guy who know how to produce this aseptic packaging. And then only later part, SIG and GFPak came about. Okay, so this is a company that produce. If you go to the milk segment, next time when you go to the supermarket, NTUC, Cold Storage, you flip the cartons. Okay, you will get to see who is the company produce the cartons. Most of the time when you flip, you will see Tetra Pak. Okay, anyone in this industry? No, right? Okay, so basically it's a company that have been providing us something but we don't even know, okay, until we flipped it, okay? And they dominate the market, I think close to 60-70% market share around the world. It's not a listed company, it's a private company. This is the GFPak. This is the China version of Tetra Pak, okay? Because when Tetra Pak wanted to expand into China, they did expand and they expanded successfully. And the core team of the Tetra Pak in China, I don't know, somehow they got argument or dispute with the company. They came out, they started GFPak, and they produced aseptic packaging. Because they know how to produce that material. Even the previous engineer from Tetra Pak came out, Caucasian, okay? They came out and then they do this whole thing together, okay? And they build a whole technology out to mass produce this whole thing. And they make it. And the sales from, so far they used to be a 0% market share, and today they have grown to, I think, close to 15% market share, okay? And this is the sales for them, for PRC. China market has been very competitive for them. Used to be growing very, very fast, but because of the competition that is happening in the market, the sales actually came down. But what is interesting for this company is the international market. It's growing really, really very, very fast, okay? So at a CAGR rate of about 43% compounded a year, okay? And this segment is contributing, becoming a big chunk of their revenue and bottom line. I think it's about close to 30-40% now. So the moment when they start to grow at a fast pace, it will start to move the whole bottom line of the company. So this is the point where I think it's really tipping for them. This is their revenue by segment. International market now accounts about 30%. Based on 2018 result, I think it should be about 35 to 40, that range. Okay, so it's getting more and more and bigger. They are going outside of China, not just within China, because China is really very competitive. And this is the market share as I have, the last updated that I have. And when I went to the AGM in 2015, the last figure that I got was 16%. Okay, this is just based on China. Okay, now they are going to Europe. Okay, you know the customers that they have in China. Okay, they also have operation in other markets like Europe. So they told GFPak, hey, come over here to Europe, set up your aseptic packaging here. I will support you. Because I don't like Tetra Pak. They sell me the machine, okay, at a break-even price. And then they sell me the packaging, the paper, okay, at a super expensive price. And I have no choice to take it. So the customer will like suck thumb because Tetra Pak is the only provider, okay? So now Tetra Pak made their money through selling these feeds. Is this recurring? It's recurring. Every time you drink a milk, finish, you have to go back and buy. You are not just buying the big, you're also buying the packaging, okay, together. Okay? So the customer asked GFPak to go to Europe and set up the whole plant. And that's why their international market has kicked off. And I think more and more people, because as a customer myself, for example, I don't want to have only one supplier. Very risky, you know. Anytime he say raise price, oh, raise price, I raise price. I cannot switch. Okay, now I have two suppliers, GFPak and Tetra Pak. Tetra Pak raise price, I go to GFPak. Yeah. In fact, they have been selling lower prices as compared to Tetra Pak. Because of that, the customers push their orders, some of them to GFPak. Now they have two suppliers, okay, and they charge at a very reasonable price. Right? And they don't invest, they don't manufacture the machine You know, you build this plant at the customer site, the machine. That GAPAC never invest in those machines. They use Tetra Pak machine. They sell the packaging, the paper to the Tetra Pak customer using their machine. Perfect business model. So not so heavy capex as compared to Tetra Pak. That's why they've gotten so much market share. This is the price for China market. When they first started, China prices was quite high. And GAPAC came in, they straight away marked down 20% of what Tetra Pak is charging. Customer, when they saw it, they were very happy because you are getting the same quality, and it's tested, it's proven, it's used by Mengniu, Yili in China, two of the largest dairy manufacturers, and they are using them. So they started to switch. And over time, Tetra Pak have no choice but to reduce their price. That's why Tetra Pak in China now is also, margins are coming down because of GAPAC. And the international market, the margins are still very high. Okay, so now this is the area where I think GAPAC is going in to disrupt the whole market around the world, wherever Tetra Pak is. Okay, I mean, if I'm Tetra Pak, I will then pissed with GAPAC. You're undercutting me using my technology, you know. Okay, and a few times they try to tweak the technology of this feed. Okay, GAPAC also, no, the customer will let GAPAC, hey, come. They just change the design. You rectify it, you change it, and then you copy it. So the customer fully support them, you know. They're not like say, hey, no, cannot. So the moment Tetra Pak tell the customer not to do it, government comes in, anti-competition law. So that's why government are also on their side. Because there's this anti-monopoly law. Okay, you're not supposed to ask your customer to stick to you only. You cannot. Yeah? That's why they actually benefited from there. And this company, of course, they need to build plant to manufacture the aseptic feeds. It costs them money. So at the initial year, their capex was quite high to build these plants. Okay, and these two plants in Europe and China has been built. Okay, now it's really just bearing the fruits. Okay, of course, in the future, they may expand to Asia because Jardine just bought into them. I think 10 to 20% stake. All right, and they may try to expand into the Asian market. If they do, maybe capex will go up. But so far now, it's just bearing the fruit sessions. They have built a plant in the early years. Now, you look at the free cash flow now, has actually came in quite healthily. Okay, these are the free cash flow, the red color. Okay, so free cash flow to equity, 2012 to 2014, so far, on average, is about 10%. Okay, so it's not as asset-light as compared to what I presented to you in the morning. Okay, but so far, this company are getting more and more, generating a lot of free cash flow. They are bearing the fruits that they have planted a few years back. Okay, and this is the share price of GAPAC when we are considering to buy them at the point of time. Okay, so we bought about, I think on average, it's about $4 something. Okay, so basically the price is about 401, and intrinsic value that I calculated based on 20 times PE, all right, and plus the cash, came out to be about 690. So this is on the high side. If you want to go for more conservative side, you can 15 times PE. Because I think the growth for this company will be there for the next 5 years as they continue to grow their international market. It's just that recently the growth slowed down because of the China market that actually dragged them down. Okay, and margin of safety based on the price that we bought is 42 cents. What is the price today? It's listed in Hong Kong Stock Exchange, by the way. About $5. Right, so this company, we were lucky because it coincided with the sell down during the last year, 20% corrections in the Chinese market. Okay, so this company get written down. But recently, I feel very sad. Okay, because just 2 weeks before we were preparing all that, we were very excited because market has been coming now. But just last 2 weeks, market has been going up. Okay, how I wish that today we conducted this, the market still crashed 30% down. Okay, but now it's recovery stage. Hopefully it will get worse. Okay. Really, we still got a lot of cash we want to deploy, right? You're not happy with the speed of recovery. So sometimes you are happy, sometimes you are sad. You are happy because the stock that you bought has gone up. You're sad because you cannot buy anymore. Okay. All right. So this is second company, and the third company is. May I guess? Too many, 50 over 1,000 companies, cannot guess. It's all covered in the Alpha Lab actually. Okay. InfoCare. Okay, those of you who have never heard of this company, okay, it's an Australian company, okay? They do funeral services, okay? Resilient business, good time, bad time, people have to die, no matter what, okay? So when you do all this, when someone that you love or someone that you know pass away, you need a professional undertaker to arrange all this service, okay? So you need to get someone to do all this for you, all right? And this is the company that do it, okay? I think some of you who have used their service before, okay, for your relative or your grandparents or whatever, okay? They are more prominent in Australia and New Zealand, but they also have exposure here in Singapore, okay? In Australia and New Zealand, they have this brand called White Lady. Anyone is Australian or lived there before? Have you all heard of this brand, White Lady? I think this is a premium market when it comes to funeral services. All right, and Simplicity, this is the budget one. It's also Australia and New Zealand. Okay, I'll show you the market share later on. And then we got Singapore Cascade. Singapore Cascade, you know not the building Singapore Cascade? I think Kallang there, right? So they own this. This belongs to them. Okay. So far, the customer has been very happy with the service that they provide. Okay. And they have a range of services to target different customer segment, premium, budget, okay, economy, basically affordable, all right? They cover all of that, okay? So depending on the needs, your budget, they will cater to you, okay? If you're very rich, you know, you can go to White Lady, you get a perfect, good service, okay? If you're not rich, you can go for affordable one, they will still do a proper funeral service for your loved one or your relatives, all right, or your friends. So far, there are two packages that you usually sell, okay, for this business model, okay. You buy from them when you need them. Basically, someone just passed away, then you need the service suddenly. Okay, so you contact them, then they will give you a quote. The other package that they have, you may not know, is when you reach 50s, 60s, you start to think about all this. Okay, now at my age, I don't think about all this, right? Okay, it's too young to think. They have this pre-need funeral. You can pay in advance for your funeral because you don't want to drag your family, your kids, you don't want to drag them in terms of financial burdens. Since you got cash now, you lock in the price before it increases, you lock in, and let's say 20 years, 30 years later you die, this company will provide a service, and then they utilize your prepaid package. Okay, they have this service in Australia and New Zealand. Singapore, they have it? I don't know, so far I never inquired them before. I don't want to inquire also. I hope I never inquire. It's not a good thing, right? But it's actually a good business, you know. The thing with this pre-need funeral, I think is really good because once they get the customer, get you your money, they lock in you as their customer, okay? So, and in terms of contribution to sales every year, it's about 15% of their sales actually came from these pre-need funeral packages. And average contract redemption is about 15 years. So on average, people who buy this package, they die 15 years later. On statistics. So you can tell those who are 50s, 60s, 70s, you think of all this already. Okay? You think of all this. Young people like me don't have to, all right? Well, but anything can happen, touch wood. All right, so these pre-need funeral packages actually give the company a float, like insurance. When you buy your insurance, the money the insurance company take it as a float, they use it to invest. Okay, so this is a huge float that they have. Okay, but so far, never mind, they are not utilizing well. If only they have Warren Buffett, then this float will grow, compound, multiply, right? But they don't have Warren Buffett, too bad. Okay, so this is a market share across the market that they are in. In Australia, they have 42% market share. In Sydney, Melbourne is about 30%. Western Australia, Perth and all that, 34%. New Zealand, they have 30% market share. Singapore Cascade, about 10% market share. Okay, so quite a substantial player in our region. And EBITDA for them, poor, very steady. Okay, no drama. Every year people still have to die. So there's a business will come in. Okay, compounding at 7%. Okay, not too bad, not a double digit, but it's quite decent. And every year they increase the prices, 3 to 4%. Every year, without fail. 3%, 4%, 3%, 4%. That's why some people, they buy in advance. 10 years later, it becomes more expensive, so you lock it in today. Okay. it's not a bad thing to buy pre-packaged. Okay, sometimes Chinese, especially like me, tell my parents go and buy all this. Hey, you want me to die so early? Okay, sometimes it's good that you lock in early the rate, right? Because eventually all of us have to die. Okay, the only thing certain is in life is death and taxes. Okay, so this one is can't escape. And well, what I like about this business is they have very good demographics around the region. Okay, meaning to say that more and more people will die. Very evil, right? Sounds like a typical businessman, but it's the truth. And either you have embraced it or you benefit from that. And one way is to actually write on that. So far, the forecasted death rate is going to accelerate from 2017 onwards, and then you will even accelerate faster from 2024 onwards at a 2.2% CAGR. Okay, so by then, combination with the price increase plus the population death rate, mortality rate increase, people, these two combinations will actually, they are in a very good position, all right, to enjoy the ride. This is in Australia, New Zealand. Okay, I don't know Singapore because I don't want to show you. It's very depressing. Okay. And yeah, basically they are in the right industry, very stable, no drama, you see. And of course, another thing they are actually benefiting of is the market consolidations. Okay, this market is very mature because all the players are there. No, you don't see new players coming in every new day, other days. Okay, the existing one is already competing with each other. Okay, so what they have been doing is that some of the traditional undertaker is actually operated by family. They started the business, small boutique business. So when they grow this funeral service from the family side, all the kids don't want to take over. Who nowadays will take over run this type of business? So a lot of family now, they have a range of customers. They are looking for exit because they don't have succession plan. Okay, and this company will come over and buy them out. Okay, so that's why they have been enjoying these market consolidations. And if you look at their core business, from the existing business is growing, but the one that they make acquisition, the one that is in orange in color, or yellow-orange, right? Okay, has been actually increasing. And they bought this company at a very good valuation relative to how much they are trading. Okay, so every time when they buy this small boutique operator funeral services, it's earning accretive for them. So they have been going around acquiring all these small players. Okay, so far you see when they first started, 10 years ago was only 19% market share in Australia. When they make this strategy, now their market share has actually grown to 34%. Then they will enjoy the pricing power because they have good economic advantage. But you don't see this company going 100%, no way, because you have anti-competition law and all that. And then New Zealand, Singapore. Okay, Singapore they don't have it, they acquired Singapore Cascade. Okay, so that's why they have 10% market share. Okay, so 2018 they also make a few acquisitions, so a lot of growth also comes from the acquisition of these companies. Okay, so the risk for this company is immortality. Yeah, if one day we all scientists discover that we can live forever, I better sell this company. There is a disruption. Okay, I hope they discover. I hope I lose money in this stock. Really, I want to live forever. Okay. And yeah, revenue so far, if you look at this company, have been quite steady. Profit also has been growing very steadily. And then we have got operating earning per share. It's growing very, very nice here. You see here, all right, 28 cents, 58 cents over 10 years. Profit margins, very stable, no drama, 11%, 12%, 13%. Okay, so no surprises here. And return on equity has been coming down a bit, okay, but still in the high range, above 20%. Okay, net debt to equity has been coming down also. They used to be highly geared last time, but now they actually par down a lot. Cash flow generations, if you look at the capex, okay, free cash flow generally is quite healthy. Only recently the capex surged because of this new investment that they're going to make, okay, and which caused the share price to drop, okay, because the market don't like it, okay, and that's the reason why we decided to look at this company. And so far, the average free cash flow that they make is about 35 million a year, very steady, growing, okay. Free cash flow on equity, let's look at it. Yep, so it's about 20%, 30%. Okay, recently dropped because of the higher capex, okay. And this is over 2 years, I think 2018 and 2019. Okay, this capex will actually increase, so your free cash flow and equity will drop. Okay, but once this investment is done, you may get to see the free cash flow to equity to cover. Okay, share price when we first cover is about $12.88, and then the share price after that came down to about $12 something, $12.05, and we started to buy. Okay, and the reason why the share price dropped so much from $18 all the way to $12, $11, that range, was mainly because they saw a new emerging trend that's happening in Australia. Okay, and this new trend is more like a youngster thing, is that nowadays people no longer see death as something that you have to mourn, you have to feel sad. Okay, nowadays youngsters in Australia, they see death as a way of, they celebrate. Okay, they don't feel sad about it, they celebrate, it's a new stage of life. Okay, so there's this new trend that is quite interesting that they discover. Okay, almost everyone thinks that this is the purpose of the funeral. Now, last time now it's celebrating life. Okay, basically people are changing. The funeral services in terms of customer needs are also changing. So they want to prepare all of their centers, okay, to catch these new trends that is coming in, where people celebrate more life, they prioritize service over price. Okay, so they actually shifted, they renovated. I think last year they closed down the Singapore Cascade. They renovated the whole structure, the whole building, and also everything. Now you go, I think they opened it. 2018 or 2017, they lost the whole income from Singapore because they closed down. I think almost half of it. And because of that, the earnings fall. Okay, and this is actually offset by the growth from the Australian market. And 2018, they closed down more stores in Australia and New Zealand because they want to renovate and prepare themselves for the future. Okay, but because when you do all this type of investment at one time, what happened to the earnings? It drops. Because of your higher depreciation, once you close down your store, customer will go to your competitor. Then you lost your business. And that's where the earnings started to came down. Okay, so they optimize the network. They have this Protect and Grow 2020 plan. They want to optimize all their brand across that, and they want to prepare for the future growth. Okay, because they are very confident that they want to grow the earnings at a double digit each year. Okay, that's what their target lah. They may miss or may not miss the target. Okay, so this is the 2018 result, I think 9 months, a half year. Okay, so you get to see that the operating earning after tax dropped by 7%. Okay, because of that, market don't like it because it's a temporary issue. I don't see this as a permanent issue because they are investing for the future. I think it's the right choice to do. Okay, but the investment may still not turn out. Okay, so this is something that you need to take note of. Okay, and the price to earning ratio for this company has been quite stable. On average, it's about 25 times. All right, and sometimes they went up to as high as 35 times. Sometimes in 0809, they came down to as low as 15 times. But most of the time, it's 18 times. That was during the crisis. Okay, so you don't think that you can buy this company at 12 times PE because it's so resilient. It's like a healthcare stock. They always trade above 20 times PE. Always. Okay, 25, 30 times because it's so stable. But recently, because of this new investment that hurt their earnings temporarily, right? Their PE actually has came down. Okay, came down to as low as below 20 times. Sometimes at one point it reached 18 times during their 0809 at the level where they were traded at the 0809 level. Okay, so if I were to base on the price when we enter, okay, $12.04. Okay, about 18 September, I think last year, September. And the operating EPS, which I estimated to be around 58 cents, and that gave me a price to earnings of about 20.8 times. Okay, is this as their historical low range, right? Okay, it's not at 25. 25 times is their fair value, 30 times is their most bullish region. And intrinsic value, if I were to base it on 25 times PE, because it's so stable, recurring in nature, I pack 25 times PE at the fair value, I get about $14.50, and margin of safety is about 11%. Okay, what is today's price? 11, Isabel? 45 cents. Okay, lower than the price that we bought. And just 1 month ago, it was trading at $10. Okay, so, but too bad the market has gone up a little bit, but it's still attractive from my point. So I think if based on today's price, the earnings should be about 20 times. Okay, should be about there. The price to earnings ratio. Okay? So far, so good. If you have a question later, you can ask me. Okay? Now, we see the time? No. Okay. I have one more company for you. How? No time. You all want more? Yes. Okay, yes, they all want. Sorry, I'll take a bit of time. But you all don't mind staying late later? Yeah, okay, because we still have a lot of good contents for you. I will do a quick one. Okay, so basically, US, this is the companies that we bought is in the US market. Thanks to the recent corrections, S&P has came down 30%. This is during the peak to the trough, okay, all the way to December 2018. But today's has actually recovered a bit. The company that we bought is Alphabet. Thanks to the recent correction. If not, we have never buy Alphabet. Because Alphabet share price crashed by, I think, 20 to 30% within the same period and make the valuation much more attractive today. Alphabet is basically the owner of Google, Android, YouTube. You know, you can't imagine without Google, okay? I've been to China, I know, that feeling, you know, I can't live without Google. Okay, so Google, majority of their revenues, earnings comes from this advertising, okay? For this company, I want to give credit to Kang Wei, okay, he's our analyst, also he contributed. Can we give him a big round of applause? Okay, so he brought up this company, he said, hey, Rusmin, you should look at Alphabet, you know, it's a great company, it's very strong economy mode. And then, of course, I told Adam, because Kang Wei not used to presentations, so Adam actually went to analyze also, and he actually did a presentation to all of you here. Okay, so when I listened to the analysis from Adam, I realized that Google actually, I'm not going through their business model again, because I explained to you earlier on. They have a very strong economy mode, because they are the only company, only Google know how to, the algorithm to search better, to give you better answer within seconds, within less than 1 second actually. Okay, the most accurate result. There's no other platform can actually do this. And we are also used to Google, okay, and because we all use Google to do our search, and they have this AI, artificial intelligence that can do learning, and then whatever that we all search, they actually do a feedback loop to their system, they start to do the search even better and better, okay. So over time, this mode will start to strengthen again over time, because they've got so much data they're feeding into their system, okay, they monetize it from there, and that's where Google actually make their money. I was there 2 years back at the Silicon Valley. I was very curious why Google is so amazing. So I went there and I looked at the Google premise. It's huge, you know. I don't know how many Singapore Polytechnic compound of Google that they actually accumulated. And they've got a good cultures over there. They've got bicycle, all right? So this network effect is very strong for them because they have the data center. And all of us are using them. Google market share is 80%. All right, in the ads, digital ads for desktop. Mobile is about 95%. I think almost all of us in this room actually use Google. Anyone using Bing? Please switch to Google, it's better. And because we bought the shares. All right, and they got a huge scale, right? They can grow without a lot of capital, okay? And when I was in China, okay, with my family, I experienced the day without Google, and I feel sucks, you know? I can't use my Google Map. I cannot navigate around. I cannot use my Gmail. I can't work. That's the worst thing that ever happened to me, you know. And my whole life was just, my trip is terrible. Until I have to figure out the VPN. Victor helped me with the VPN. Finally, I managed to get the VPN and I hacked into the system for China firewall and I managed to get Google up. I think 3 days later, I feel so horrible. Okay, so Google has actually been part of my life. I think any Android user here can actually show, right? Oh, you all cannot live without Google because Google owns that platform. Okay, and China, it's not a place you want to go travel. Look at the crowds. This is at Chengdu, Jiuzhaigou. But they have got very good sceneries over there. It's terrible. Even the lady was shocked. So crowded. Right. So internet users has been growing. All right, it will continue to grow. So Google is in the right place, the right time. All right, that's why Larry Page and Sergey Brin actually make so much money. Okay, revenue, everything exponential. All right, so profit margins very fat, okay, 26%. Operating profit per share, wow, it's growing at 15% a year, compounded annualized return. Very steady. Huh? Free cash flow, which I showed you earlier on, is about 15%, 20%. The reason why it's low is because they have got so much cash. Half of the equity, in fact, I think 80% of the equities are cash. Okay, so they are holding on to those cash and investment, and they're putting on the bets. Okay, and yeah. So I think what you guys are more interested is, Rusmin, what price you buy? let me go straight to the point, okay, since I'm also short of time. Okay, so we bought Google at about $1,015, okay, 88 cents. Kang Wei, how much you bought? 600. Can we give you a big round of applause? Okay. 31 years old. Yeah. So we got a lot of talents in this room. Huh? Okay, so please talk around, hang around. You might get some good idea. So PE of Google has been around 30 times, 25 times, 35 times, that range. Okay, so if I were to use the price that we bought, let's round it up to 10, 16. Okay, adjusted EPS latest 12 months is about 28.8. Based on the price that I bought is about 35 times PE. It's not cheap. Okay, that's why we haven't buy a lot yet. Okay, but based on the intrinsic value, if I were to base it on PE 30 times, it's about 864. Okay, but because Google they hoard so much cash and so much investment, short-term investment that they have in the book, I'm going to classify them as using it as an enterprise value. I'm going to add it into my intrinsic value. Their cash is about 144. Okay, it's made of cash per share. And if I had to add up together, EV to earnings is about 30 times. If I add up together, is about the intrinsic value is about $1,000. Okay, so when Google came down to about 1,015 cents, do you wait until 1,000 or do you buy a bit? Some of you, if you wait, I buy. If you wait, you have missed it. Okay, so I think it came down, to 1,000. But I didn't wait, I just started to buy. All right, and margin of safety is about negative, but it's a fair value. I would say it's fair value to me when we bought it. Google now is about 1,100, around there. Okay, so it's gone up a little bit, so you just monitor and of course do your own due diligence. Okay, and there are risks, you got antitrust, you have use ads blocking, but I don't think these are huge threat for Google. Okay, for good businesses, we are comfortable buying at fair value, even slightly overvalued, because the moat of Google is so strong. I've never seen a moat so strong before in our life, So this is one of the companies that that's why when I went to China, I felt the impact of Google in my life. Okay, so that's why this is perhaps one of the good companies. Okay, so this new features, okay, Alpha members, okay, you can just log in to your Alpha. You should be able to see a new tab here called Portfolio. Okay, and under the portfolio, we have US portfolio, we have Asia portfolio. Okay, so over time, this year, if we buy anything, we will update there. Next year, we will update there. We will sell anything, we also update here. Okay, you guys like this feature? Yes. Oh, so soft. You like this feature? Yes. Okay, cool. All right, so yeah, I think time for Q&A. One question is okay.
All right, thank you so much, Rusmin. Of course, you know how much analysis, hard work, and due diligence Rusmin had to do to come up with that list. So if you liked what he shared, please give him a warm round of applause to thank him.
Oh, thank you.
And of course, even if you pick your stock right, sometimes you still have that doubt at the back of your head. So we hope that gives you some direction, what to look out for. All right, we have time for, I think, just one question before we go on to the next one. Do you have any to kickstart? Then I'll just ask Rusmin straight up.
Yeah.
Okay, you had to do so much research, right? What are some of the popular and big names that you came across that didn't make the list? Maybe big some things that
names that I think locally
people should avoid.
Locally
didn't make the cut.
Well, I mentioned one company just now, Sino-Granus. That's one company that I think you guys should stay far away with it. Yuzu has been exposed. I think in terms of big cap, try to avoid those companies that, like even in the STI, right? I tried to did the analysis on Keppel Corp and Sembcorp Marine, free cash flow to equity. Surprisingly, is negative or single-digit percentage. Okay, so that is something that I thought these are blue chips. How come they are not generating free cash flow? Okay, that's what a lot of blue chips companies in Australia have. So yeah, you have got a lousy company, worse company they have to avoid, but at the same time, you also don't want to invest in the so-so company because your investment at the end of the day is not going to anywhere. Okay, you're probably just collecting the dividends, stuff like that. Yeah.
All right, besides investment ideas, Rusmin has something special for everyone.
Yes. Before we go for a break, okay, I have a very important announcement. Another important announcement. Okay, you want to hear? Yeah, so I think recently Victor shared this article. Anyone read this article? All right, four important lessons that I learned from investing. Please read it because it's reflections for him. And usually I like to learn from other people's mistakes, so I don't repeat the mistake myself. Okay, and one of the things that he talked about is buying too many stocks, which I mentioned just now. Okay, the thing with buying too many stocks is that you see, if you can fish a whale, okay, why don't go for a whale instead of those smaller fishes? Okay, when I talk about whale, basically those companies are going to give us a lot of potential. You're going to give us 10 times return over the next 10 years, 20 years. Okay, so there's one thing that I realized that some of the companies that I have in my portfolio, hey, I don't have those companies that got huge potential that give me 10 times. So we do a reshuffling of our stock. We sold away whether they're making losses or gain. We sold away, concentrate on those stocks that have potential. That's one thing that I learned. Okay, and another thing that I've experienced myself over the years as we started Fifth Person. Okay. I met a lot of new friends here. In fact, I see a lot of familiar faces today. Thank you so much for coming here. Okay, and some guys that I know, he's not here today. Okay, I don't mention the name also because I experienced it a few times. Okay, he and a few of them keep coming to me and asking me, what should they do with the stock that they just bought? Okay, in fact, the companies that I presented, it was a good company. It's a good company even today. The fundamental is still strong. The runway is still very good. All right. And he asked me, Rusmin, after he bought 3 weeks later, the share price appreciated by 30%. He made, I think, about 20%. So he asked me, Rusmin, should I sell the stock and lock in the profit? Okay. I said, this company has still a long runway. Why do you want to sell? Okay. Then, okay, that's it. After that, then time goes by, then he had trade war come in, share price now collapsed by 20%. Then he come and ask me again, Rusmin, now I'm making losses, should I sell or not? Because the market going to crash even more, So I buy back later. Okay, let's not talk about even trading, okay? I know you all have that experience, the feeling, don't know what to do sometimes, feeling lost. I mean, even sometimes for me when I first started, I had it. Okay, my mother-in-law also have it. That's why she always asks me. So I have to tell her, no, don't panic, So we all had that feeling, okay? But what I'm trying to say here is that instead of trying to timing the market, right? Basically buying at this price, sell at this price, or sell when it's going down. Before you go down further, you sell, What you are trying to do is basically not even trading, You are just opportunistic, let's put it that way. You're trying to make the most profit out of it. So when you keep doing this, when you make 20%, you sell. When you lost 30%, you sell. At the end of the day, you break even. You keep doing this every year, you realize that your churn rate for the portfolio is very, very high. And then you ended up with a break-even portfolio. Okay? In fact, if you have this confusion in your head, you experienced it before, even I suggested to them, is that if you have this thinking for yourself, when you buy a stock, when the share price goes up or go down, you don't know what to do, you just have to remember this. You are buying assets, okay? When you buy this asset is supposed to help you to retire, okay? So over time, you should be accumulating more and more assets. The more assets that you have, the more passive income that you're going to receive, the more money that you're going to get at the end of the day. Okay, so when I say asset, basically I mean great businesses. Okay, we all look at businesses here, so we should focus on finding those companies that have a good businesses. Okay, and because of this thoughts that come out so often and frequently, we decided to print this T-shirt. Okay, for all our staff. Okay, can't wait, you can have it also. Okay, so this T-shirt for all our staff is, I buy great businesses. Okay? So, this is to remind us that every time when the share price goes up, the company that we bought, should I sell, should I buy? You shouldn't have the thoughts. I'm buying businesses. I'm buying great businesses. I should keep it for long term. If the fundamental doesn't change, I should keep it. If the share price drop, I shouldn't panic. I shouldn't try to time the market. I'm buying businesses. When I am an entrepreneur, I don't look at how much I'm going to sell my business on a day-to-day basis. Okay? You are just focusing on the business. You're just trying to add value to your customer and stuff like that. Okay? So, how many of you want this T-shirt for a fee? I see a show, you don't mind paying to get this, because this is going to save a lot of money, you know. It's a good reminder, you know. Can I see a show of hand? How many of you? Okay. Wow, so little. How many of you want this t-shirt for free? Wow, those who never raise your hand, you don't want, huh? Okay. All right. So, yeah. So the good news that I have for you is all of you here in this room will go home with this t-shirt for free. Okay. But on one condition. Okay. Can we all wear this tomorrow? Yeah, because I'm wearing this tomorrow also. I'm less casual tomorrow. That's because we're going to have more fun, more contents tomorrow. Okay, so promise me to wear this tomorrow, okay? If not, I'll ask you. Okay, so we have this t-shirt now at the registration counter where in the morning you register. Okay, the t-shirts are there. You just have to tell them the size that you're wearing. I'm wearing a S. Okay, Victor slightly fatter than me, M. Okay, no, he's bigger. His build is bigger. Okay, yeah, M, right? Oh, sorry. I'm S. He is M. M, yeah. Adam is L. Bigger frame. Yeah. As you grow older, you get bigger. Soon it's my turn also. Okay. So yeah, that's all right. Any other important announcement?
That's it, Rusmin. Thank you so much for the free t-shirt. If you want to know as well, my size is L.
Yeah, it's size L.
So that's for reference. All right, this is a 10-minute break for all of you to get your free t-shirts at the foyer. And when you're back, we have our next speaker. Let's say hi to everyone. He is Tay Jun Hao. He's from the Heritage Global Capital Fund at Swiss Asia Financial Services, and he'll be going through the retail sector. What does it mean for 2019? All right, we'll see you back here at 2:50 p.m.